Hi, I'm Maximiliano Cárcamo, and this is Stock Market Investing 101 Part 4. In this video, we will review how you have to manage your stocks after buying them. Hope you enjoy! Once you have bought all the stocks you wanted to buy, there's not much you really have to do. You mainly just have to wait
and do a few very simple tasks.
One thing you'll have to do after buying stocks is collect dividends. Dividends will be transferred from your stockbroker directly to the bank account you have linked to this broker. You can choose to keep these dividends, or you can reinvest them in the stock market by buying more stocks with the dividend money. Another thing you can do to successfully manage your stocks is making additional contributions to your stock portfolio. This means, in very basic terms, just buying more stocks. You can either do this regularly, like buying $300 of the S&P fund every month, which will, by the way, make a safe investment because you will buy stocks at both the highs and the lows of the market. Or you can add these contributions when you think there's a very good opportunity. For example, you might decide to buy stocks after these have fallen in price very sharply in the past months. So, when should you sell your stocks? The moment when you sell your stocks is up to you. Just make sure that this moment is in line with your financial goals. If, for example, you're investing for a college tuition, you should probably sell your stocks right before having to pay for college. And if you're investing in order to buy a car when you turn 18, you should probably sell your stocks right when you turn 18 in order to buy the car. Also, if a stock has become too risky for your financial situation, because, for example, it has skyrocketed in price without much underlying company growth, you can choose to sell this stock to buy a safer option. If, on the other hand, the stock has become too safe for you, maybe because it has grown to a point where it has trouble growing more, you can sell this stock to buy a risky or more potentially profitable stock.
If you're planning on using stock market investing as a way of retiring, you could use this calculator in order to know when and how you need to sell your stocks in order to retire. So let's enter here some fictitious information about myself. So let's imagine I'm 32 years old and I plan to retire at 65. Let's say I have $20,000 in investments and that I will contribute the monthly amount of $1,000. For annual return, let's write that I will have a 10% annual return. I wrote this number because this is the average return of the S&P 500 annually. And now we have to click calculate. With these numbers, in 33 years, the time when I will be 65, my savings in the stock market will have grown to $3.624 million. With this amount of money invested in the stock market, I can live the rest of my life off of the annual profits of my stock portfolio. Let's say that at age 65, I put all my money into safe investments that give me an annual return of 4%. A 4% return on the savings that I have generated over my investing career equals this amount of money, around $144,000. After deducting the 15% tax I have to pay for selling stocks in the US, this is the amount of money I could live off of for the rest of my life by only selling the annual profits of my roughly $3,600,000 of investments in stocks.
This shows how powerful stock market investing is. With only $20,000 of initial investment and a monthly contribution of $1,000, you can have around $120,000 of retirement income at age 65 without losing your savings. And this is considering that you started investing at age 32. If you would have started earlier, you could have had even more money for your retirement. If you're still not convinced about the benefits that stock market investing has for your life, just listen to what Maite, Castañeda, an experienced stock investor, said when I asked her if she thought stocks were a good way of investing.
Hello, I am Maite Castañeda. I am 41 years old and I've been investing in the stock market since 2003 when I started working and having savings. When you buy a stock, you buy part of a company, and because all of public traded companies need to disclose their financial information for transparency, you have a lot of information to do your research and to really pick wisely in what company and in what industry you want to invest. So I really encourage to invest in the stock market, at least part of your savings.
Maite is living proof that stock market investing yields positive returns in the long run. So just like her, I encourage all of you to invest at least part of your savings in the stock market. It will grow your wealth exponentially if you invest for long periods of time, and if you invest in the S&P 500 or choose stocks wisely, which you can do so because of all the financial information that companies are obliged to disclose, the chances of you losing money in the stock market in the long run are close to none. So for a better future, invest in stocks. And that's the end of this video and the end of Stock Market 101, the YouTube educational course where I taught how to invest and why to invest. Thank you to everyone that stuck all the way through the series, and I hope you truly enjoyed it and learned something from it. I also hope that you become inspired to invest in the stock market because I truly believe that it will give you enormous financial benefits in the long run. By the way, in around 10 days, I will be posting a Google form in the description of this video where people who watch the entire Stock Market 101 series will be able to answer questions that will measure their retainment on all of the information I said. So if you want to respond to this form, feel free to do so. In 10 days, I will include the link down below. Once again, thank you so much for watching. Goodbye.